In this short video, we're just going to run through an introduction to prepayments. Let's start with a quick definition. So, a prepayment is basically a payment or an expense in advance of the period to which the expense relates. Now, there are many examples of these, including things like rent, insurance, where you're basically paying up front. So it doesn't just cover the period in which the expense is paid or is incurred, but it also relates to subsequent periods as well and covers that period. Let's work through an example of a prepayment so you can understand what it is, how it impacts other reports, and also why we might want to post adjustments for that. Let's take rent as the example. We'll say rent is £1,000 a month. It's paid quarterly at the start of each period, and to enter that in Sage Accounts you would receive a purchase invoice, or you might just do a straightforward bank payment, and we'll say you would enter that for £3,000. So if we enter the invoice for £3,000 and don't post any further adjustments, what we'd see in month 1 on our profit and loss is that we'd have an expense of £3,000. In month 2 we'd have no expense because we haven't entered any additional transactions, and in month 3 again no expense because we haven't entered any additional transactions. However, the rent applicable for that period is £1,000 per month. So by posting prepayments, or what we term prepayment adjustments, we'd actually have £1,000 a month. So rather than a spike in month 1 showing the full £3,000, by posting the adjustments we see £1,000 in each month. So that's what we're trying to achieve by posting these adjustments.